Welcome to my YouTube channel. This is Ambafx right there. In the previous video we talked about how to differentiate between the supply and demand and the support and resistance, because we know so many people don't know the distinct difference between the two, and then we receive a lot of positive feedback about that particular video right there. So if you have not watched the video, just click on the video section, the video on this YouTube channel, the videos section. Then you see the video there is the last video we dropped before this one. So if you have not subscribed to this channel, please click on the subscription button, subscribe, like, and then share. A big thank you to everybody that has been doing that on a regular basis. So today we want to talk about the various ethnic techniques in supply and demand levels. So many people know supply and demand, but they don't know the entry and the exit techniques. They don't know where they should enter or where they should just hold on for some levels to uh, reach or to show before they will enter their position. So the first one we want to talk about is we want to talk about the supply continuation. So we want to talk about the supply continuation. That is our supply continuation entry. Let's make it going red. Okay, let's make it this color. It should okay. So we have the supply continuation entry. So this is how the supply continuation entry, this is how it looks like. So we break this supply, we break this demand level. Then so this is the supply level right there. So this is how the supply level continuation looks like. You understand? So after this supply level, let's say there's a rejection at this particular area, and this particular area serves as what, as the supply level, and then we move to the downside. So we might still see a retest of that particular level. So this is the supply right here. So this is the supply level at that particular area. So this is a supply continuation. This is a supply continuation entry. So many people will be like, well, we need to see this in the chart. You know, all these things cannot be perfect in this chart as we illustrate it here. You understand? So let me show you how it looks like in a chart. So coming to a chart, this is how the supply continuation, this is how it looks like in a chart. So using Australian dollar as an example, we have something like this. Then the supply level at this particular, as you can see, we have a rejection at that particular area. Then we have what, we have a retest of what, of that supply level right there. Hope you understand. So this is the what, this is the supply level. So if you see something like this, that okay, we have the accumulation here, then we have the supply level which respect at this particular area, then there should be a continuation of that supply. Hope you understand. So there are some orders that it comes to what, there are some others it's left behind at this area, so it comes to what, to mitigate that particular area. Then you see a sharp decline. So this one like this, if you were to check it, let's say we have our order here, then let's say our take profit at the next or at the next support level. So where you put your stop loss will be just immediately after the rejection. After you see this particular rejection right here, then you put your what, you put your stop loss. So your stop loss might not be up to like 15 or let's say 10 to 15 pips, at most 20 pips. Then you target something like let's say my target like 100 pips or so. So this is it. As you can see, we have a very sharp move to the downside, and then let's say you place your take profit at the next or at the next support level. So this is 1:6.5 right here. So this is the supply continuation entry. This is how it looks like. So the next one we are going to look at is a demand continuation entry. So as you can see, it will be the opposite of what, of the supply continuation entry. That is to be something like this. Then we have a breakout. Then let's say a move to this side to the particular demand level, then a rejection. So this is how the demand continuation entry, this is how it looks like. So this is how it looks like. Let's write it, demand continuation entry. Demand continuation entry. So that's how the demand continuation entry looks like. So let's check it out in the chart, how it looks like in the chart. So this is the demand continuation entry. As you can see, we have the accumulation here, then it's moved to this side, then it comes to mitigate that particular area, then boom. So this is the demand level right here. This is demand level right here. Then it's went up, then it comes to retest that particular level. So this is a very this is a smart entry. Then you do what, you enter, you set your, okay, that's a mistake right there, long position. So you enter, you set your let's say stop loss below that particular rejected area, a little pips below. So then you target the next resistance. So as you can see, we have 1.54 risk to reward ratio at this particular area. So as you can see, the winning ratio is very high. Let's say you do this like 6 to 7 trade, and then you, let's say out of that 6 to 7 trade, you win like 2 trade or 3 trade out of it, then you are still in profit. I hope you understand. So because the risk is minimal and the reward is huge. So the next one you want to look at is let's look at the bull trap aggressive entry. So this one Okay, let's try and eliminate this one so that we can have space. So the bootstrap aggressive entry, so let's have it. Bootstrap aggressive entry. Aggressive entry. Bootstrap aggressive entry. So the meaning of bootstrap is that it trap the buyer. So this word is very very important. You must note this particular word right here. So the bull trap. So it means that it trap the buyer. There are some people that are trapped at this particular area before it went to its particular direction. So let's now illustrate how the bull trap aggressive entry looks like. It looks like this, something like this. I think, yeah, like this, like this. Then we might see something like a break to the downside. Then something like this. You know, we are familiar with this supply and then demand level. So like right here, this is the supply level at this particular area. So the reason why it is the bull trap is because buyers are trapped at this particular area. So this area, we have break of structure at this particular area. That is the BOC. So buyers are trapped here. Some people will be like, okay, they will set their buy stop at this particular area, then it will just move few pips to their direction, then boom, it will hit their stop loss. So here like this, we have some stop loss that were set at this particular area. Stops. So let's use red. Yeah, that's danger. Assistant. So the buyers will enter and they might set their stop loss here or somewhere below this particular area, but most of the time they might set it here after they've went with their buy stop, and then it's moved few pips to their direction, then it boom to the downside. So this is the bootstrap aggressive entry. So the aggressive entry here is when you enter from here at this particular area. When you enter, because this is a supply level. Let's see going. This is a supply level right there. So the aggressive entry is when you enter from this particular area. So we have the conservative entry too. We have bootstrap conservative entry. So I will explain everything for you in the using the chart. So this is conservative entry. You know, this is aggressive entry. So this is how conservative entry looks like. You wait for it to break below this particular you wait for it to break below this particular level here to hit their stops before you enter. So then when you enter, then you might put your stop loss above this particular area. So this is let's say you know they might have already set their stops at this particular area. That is, the buyers that are trapped have already set their stop loss here, and they've used buy stop. So when it come back to hit their stops, then you might see some maybe some retest, then what you enter conservatively at this particular area. So this is a bootstrapped conservative entry. So this is the bootstrapped conservative entry. This is the aggressive entry when you enter immediately when you see a rejection at what at this supply level. But this is a aggressive conservative entry when you wait for it to hit their stops and come back to this particular level. Then you do what, you place your entry. You know, there is a break of structure at this particular area, then there's a rejection at this particular supply level. So we have some buyers that are trapped here. They thought, okay, we have a break of this consolidation, then some of them might have set buy stop, or some of them might have buy directly from here, and then they might set some their take profits ahead, maybe at this particular level, and then some of them might have set break even before it comes and hits them out. It depends on the type of trader they are. So this is the conservative entry where you wait for it to break below that particular consolidation again, and then you do what, you enter and set your stop loss, maybe according to your risk tolerance. So that is that about the bootstrap, aggressive entry, and conservative entry. So let's see how it looks like in the charts. So this is how the bootstrapped entry, this is how it works. As you can see, some persons might have said that, okay, we have a break of what, a break of structure at this particular area. That is what we call the BOC. You know, we have a break of structure at this particular area, and some person might have buy at this area. They might have put their buy stop at this particular area, forgetting that, okay, this is a supply level right here. As you can see, we have a supply level right there. So after various consolidation, then we have a break of structure. Then it's mitigate that particular supply level. Then we have a rejection. So some persons might have entered at this particular area. So let me show you the aggressive entry. So some persons might have entered at this area that, okay, we've break through we have reject the supply level already, so let me enter at this area. So this is the aggressive entry, sorry, this is the aggressive entry, and then here is what is the conservative entry when it has break inside that particular consolidation area. Then we might enter somewhere around there. So this is the aggressive entry, and then this is the conservative entry. So that is how it looks like in a chart. So as you see, you should be able to recognize the maybe we have a bull trap there, or so that's how it is. So this is the supply level at this particular area. This is supply level. So we have a supply level at this area. So the next one you want to look is the bear trapped aggressive entry and what, and the conservative entry. So this is how the bear trap aggressive entry, this is how it looks like. So let's get rid of this. So this is how the bear trap aggressive entry, this is how it looks like. You know, to be the opposite of the bull trap. Then, you know, you have a consolidation phase, then the distribution phase, then we have something like here being the what, being the demand level. Hope you understand. So here being the demand level, so like this is what, this is the aggressive entry. So this is demand level right here. Yeah, this is how it looks like. Then we have some sellers that are trapped at this particular area, thinking that we have what, we have the break of structure already, thinking that we have break this particular area, not knowing that there's a what, a supply level that comes to what, that it comes to mitigate at this particular area before it continues to what, to move up. Hope you understand. So this is what, this is the what we call the aggressive entry. So this is aggressive entry right here, and then this is the conservative entry. When we break through this particular consolidation, then we break what, we break to the what, to the ups, up, down, sorry, to the upside. So we call it the what, the bear trap. This is a conservative, sorry, bear trapped conservative what, conservative entry. When we break through the this particular area before what, before you enter that particular zone, you know, there are some stops that might have been eaten at this particular area, sorry, that might have been eaten at this particular area. So some people stop loss have it, so we now have a what, rejection to what, to the upside. Then a conservative trader will wait for it to break back inside that particular consolidation zone before he or she take that particular trade right there. So let's now check how it looks like in the chart. So this is how it looks like in the chart. So we have what we call a consolidation at this particular area. Then we have a move up, then we have a consolidation, then we have a break of this particular structure. Then it comes to what, it comes to what, to mitigate that particular area again, to test that particular area. So you know, some people might have be like, okay, after breaking this particular level we are in a downtrend, so they might have set their they might have set their sell stop at this particular area. Then we have what we have the test of that particular demand. So this is the demand level right here. So this is demand level right there. This is a break of what? This is a break of structure. Then we have the peers that are trapped at this particular area. Then we saw the continuation of what of the upside. So that is the four entry techniques. We have some other ones too, but these ones are the very important ones we have in this supply and demand entry. So if you found this educative and then you are new to this channel, please click on the subscription button, like and share. So let me know what to think about the various techniques, entry techniques in the comment section, and then don't forget to share it to your friend so that they can be aware too, and then for a profitable trading setup. These setups work, and then it gives a high what we call a very high risk to reward ratio, like 1:5, 1:6 above, and then it's a smart entry and is a smart money techniques. So thanks for watching, and then have a nice time and a nice day.